Clarity collapse is underway today. A lot of news breaking out of DC, and it doesn't look good, or does it? We'll break it all down for you. I do want to thank our sponsor today, and that is Tangem. With all of this news, I think DeFi and also self-custody are going to become the heroes. And self-custody is one of the ways that you guys can get started. You can do this with a hardware wallet. All you have to do is go over to tangem.com and, of course, click the Get Tangem button. It's going to give you a 3-card set. Get that. This, of course, will give you what is known as true ownership in digital assets, meaning you get to have full control of your own asset. And I anticipate we're going to see all sorts of things coming onto these self-custody wallets, including tokenized stocks, tokenized gold. All that is available where you guys can get into this. Very easy to use and to set up. Works like a credit card with your phone. Use our code down below to get a little bit of a discount and get started. All right, let's go over to the first thing breaking right now. Iran is confirming that there has been an outreach by the U.S. and that Iran is willing to listen. So we've got a little bit of a proposal possibly going into the queue. Now, there are a lot of demands from both sides. I anticipate this is more of a negotiation tactic from both sides, trying to play a power position. As you can see, there's some pretty big ones. Some of them, of course, are military action, war-related losses, formal control over Hormuz, no restrictions. This is another one on ballistic missile program. All those kind of things that can get pretty dicey. We'll see how it plays out. But the point is, are we still in a de-escalation phase? That's the question I think that a lot of people are looking at. I want to go clip over to a clip real quick. This is Mark Cudmore. He's talking about how does this off-ramp look, at least getting out of this war, and how would the markets respond? Take a look.
I guess it's fair to say that in the last 24 hours, things have improved marginally, very, very marginally, by the fact that Trump has pulled back from a pretty extreme ultimatum. I say that very, very marginally because everyone presumed he would pull back. First of all, just destroying energy infrastructure is very explicitly a war crime, but also it would not seem to kind of help their situation of getting lower energy prices. So it's marginal. But from a week ago, things are much worse. We've learned that Iran has greater range in their missiles. The way that Trump is flip-flopping shows that Iran has much more power. It's being acknowledged that Iran controls when the state opens. That's why Trump made this ultimatum that Iran must open it. Trump has pulled back from the narrative that they've destroyed Iran's navy and they're fully in control and they've won the war. He's going, please open it. We're desperate. So I think things are significantly worse than a week ago. And what's worrying, though, is that investors remain extremely complacent. So the overall trend is getting worse, and yet investors remain very complacent. So look, I've been bearish for the last 3 weeks. It's the worst month in global stocks in 3.5 years. I still think it's going to get a lot worse over the next week or two because I'm not a geopolitical expert, but there's no off-ramp that I see as viable for Iran right now.
All right, so I don't know that I agree with that. I think there will be a negotiation out of this. I'm hoping that is the case. Again, I'm no geopolitical expert, but you just have to look at the narrative. And the narrative really is built off of what's happening in the U.S. economy and obviously within the U.S. stock market. Investors are pouring money right now into energy stocks. This is a record pace. If you could look at comparisons, previous week peak was about $7 billion at the beginning of 21. That is now, we're also seeing West Texas crude now surging to $129 a barrel. I know that's been back down off of that, but this all comes nearly 2 years of consistent outflows. So think about that. Energy stocks seeing a little bit of a historic move. Other things you got to look at right here, the U.S. will now cancel its investment into offshore wind farms. So that means they're redirecting everything toward energy, becoming and staying energy independent. You remember not too long ago when Putin and Trump met in Alaska, and they met over the LNG pipeline that they were trying to build, and it wasn't going to be ready. So I think there was that a deal that they were trying to make with the Russians so they could allow LNG to come out. Because remember, Qatar also got hit where they supply 20% of LNG. So very interesting things happening right now on the energy markets in specific. Other things that you got to look at is this right here. A revised draft of the Clarity Act has been now revealed. And this is the issue that we're talking about today. Now, the question is, everything has been pushed on to yield stablecoin payment. And if you're brand new to crypto, What it simply means is you hold a USDC or a stablecoin, you're getting yield against that. In some cases, up to 4% right now. Banks do not pay anywhere near that. This was a threat to them. They, of course, have now appears, at least in the pre-draft of what we're starting to see come out, is that this has now gone into where if you're not making this work, your asset, stablecoins, then you would not get yield. So that's the issue. Rewards tied to balances no longer allowed. Lawmakers aim to avoid similarities with bank deposits. The move reflects a lot of pressure coming from the sector. Debate around the stablecoin utility is intensifying. All of this gets into it. I want to ask, though, the question, because this may get intriguing, because I think the point of you going in and initializing a yield activity within a wallet, would that not qualify for being able to get yields, since that would not be a passive move of me just parking US dollars in there? There's a lot of things that I think are yet to come out on this. A couple of things from Eleanor. She's been breaking a lot of news on this, and she hits on the proposal would also permit activity-based rewards tied to user activity, loyalty, promotion, subscription programs. Maybe that would be the angle here. Notice subscription programs. Well, you pay for a subscription right now, Coinbase One, Kraken Plus, those kind of things. Could you end up actually getting yield if you're in one of those programs, you know, tied to some sort of user inactive? That's also intriguing. So all of this is still yet to be done. We'll see how it plays out. There are a little bit of activity around DeFi, because this is a big concern right now. How is this going to play out? We're hoping that we get some language coming from this, because this has been very secret coming out of DC. However, with all that secrecy, I think what we saw here was Circle responding to this. And it's amazing that there was that many holders that saw this move just as a narrative that would be bad for Circle, when in reality, this might be good, because they would no longer have to pay yield out to Coinbase. Coinbase may not have to pay yield out to you, depending on what your qualification is. But for it to drop Circle like it did, over 15% today, is pretty significant. I wonder what it will really look like in the short term. Kathy Wood, remember, sold 5.9 million worth of Circle 4 days ago, and it crashed 16%. Interesting. I'm not saying anything. I'm just saying sometimes you're lucky. Something, though, it seems like Ripple wrote the Clarity Act. If you know, you know. This is Hugo Phelan there. He, of course, kind of runs the network there at Flare. And there are a rewards program activity available right now. If you get into Flare token, there's governance that allows you to earn money on XRP. So that's kind of interesting that you have these kind of rewards programs that most likely will be protected in DeFi. And of course, they're kind of hitting on that very point right there. A couple other points I want to hit right here. This forces capital that previously chased centralized yield now to maybe go into DeFi protocols instead. So remember, a lot of people are like, hey, I'm moving into stablecoins, but I want to try to get a yield on it. So I'm going to put it all in Coinbase or in Gemini or in Robinhood, even though Robinhood doesn't pay on stablecoins, they pay on dollars. Could we see that flight of capital coming out of centralized exchanges moving their way onto DeFi if we start to see the lack of that availability there? So we put up a poll that said, did the banks win on Clarity? Now, I know you guys would say, yes, the banks won. I don't think so. I think it's a no. I know that this is going to come back as yes, banks won, but I'm going to click no. And here's the reason why. Because now they have realized that we were right. And I think the fact that they are seeing and will see continued pushback on this. And remember, this isn't even through yet. It's not even done. So we may still see more of a fight continuing in DC as this plays out. And the banks are now starting to see and understand that they're going to have to concede something. At least they conceded something here. I wonder how much more could be conceded if the pushback is real. This, of course, is interesting because Tolly hits on this. Formally verify your code, please. Audit the code and proofs. Don't trust anything or anyone. You know what that means right there? Well, there's Vlad kind of saying, yeah, you probably should pay attention. This is a big deal because DeFi wins. One other thing I want to hit on right here, because part of the, at least on the surface of what we're hearing coming out of DC is that there may be something in there related to Trump's activities in crypto. And here's Margaret Ryan giving her resignation. And this is an SEC enforcement chief jumping out, and mainly because of the Trump's activity with World Liberty Fi. So I don't know if that is even in the cards, because if that is still in the bill, I can't imagine that Trump would sign off on this. So this thing never makes it out of DC. Other things right here, Apollo is now capping redemptions at 5%. Some more private credit getting hit. Not good for, I think, in general, limitations. Ari's also dropping in redemptions, limiting at 10.7 billion in private equity fund. Now starting to see a surge in people trying to get those assets. The other thing you got to look at, guys, nothing that's happening is going to change our debt. And we are still in a dollar system that is losing money every day just because of what we're dealing with the debt acquisition. I think the key here is getting the flip of the switch and starting to move into a new revolution here around not only digital assets, but I think tokenized securities, tokenized treasuries that may open this thing up for the United States. I don't think it solves the problem, but it definitely kicks the can down the road. So let's wrap up real quick. Just take a look at the SPX. You can kind of see it has been falling for quite some time. That's the daily chart. So continuing to pull down at 65.77. Gold has also been falling dramatically. Look at that wick right there, down to 4,100. Do we see a $3,000 gold coming in? I'd like to know. Other things that are happening right now, I want to kind of focus in on a couple. There, of course, is Coinbase also seeing a little bit of a setback at 182. Circle, Meta was down. Circle, of course, now still on a 19% candle on the day right there. Again, I think this may be a little bit overblown for what's happening right now for Circle. So they're just getting a little bit of the pushback here. Lots happening. Hood, though, did take a little bit of a step down as well. So I think the finance markets are trying to understand maybe Clarity has a bigger reach than everyone is expecting. Well, we're going to get more to you as we get more data coming out of DC and what this means for crypto in general. Stay tuned. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.